First of all, I've been talking about Bitcoin getting to 150 to 180 for a long time, for years here. And I figured sometime in the fall. I thought it was going to hit 150 to 180 sometime in November. I guess it's not out of the question here. You know, I mean, Josh Mann thinks it might go to 444. I don't know about that. But I do think that we're going to see an expansion in the price of Bitcoin here, because we're seeing an expansion in liquidity.
If Ethereum were to just go up to 5K and sweep the high again and then drop again like it did last time, that's not going to lead you to an alt season, right? In order to get an alt season, you have to have Ethereum hold 5K. But again, you can't have that unless Bitcoin is going up a lot more and liquidity is flowing back to the king.
Bitcoin is currently trading around $108,000 after reaching a yearly high of $126,200 in 2025. Despite recent fluctuations and short-term bearish signals, the overall market shows signs of growing liquidity and renewed investor interest. Key support levels are holding near $107,700, while resistance is observed around $114,000 to $116,000. Creating a critical zone for the next breakout. Analysts predict Bitcoin could push toward $150,000 to $180,000 later this year, driven mainly by expanding liquidity and stronger buying pressure. However, others caution about potential pullbacks toward $100,000 before any sustained rally. Market sentiment remains mixed, with technical indicators showing neutral trends but alerting to potential volatility ahead. In recent interviews, James Lavish explained he has expected Bitcoin to reach between $150,000 and $180,000 sometime in the fall, owing to this expanding liquidity. He also referenced a more extreme forecast by Josh Mann, who believes Bitcoin could climb as high as $444,000, though Lavish himself is less certain about such an outcome. Meanwhile, Benjamin Cowen added that for a true altcoin season to occur, Ethereum must hold its price above $5,000, which relies heavily on Bitcoin making further significant gains. Cowen stressed that liquidity needs to rotate back into Bitcoin, as it remains the king of the market, to support Ethereum and overall altcoin strength. As Bitcoin hovers at this pivotal level, torn between explosive potential and looming correction, one has to wonder, are we witnessing the calm before a historic breakout, or the quiet setup for another market reckoning? Stay tuned as we bring you more clips from James Lavish. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
First of all, I've been talking about Bitcoin getting to 150 to 180 for a long time, for years here. And I figured sometime in the fall. I thought it was going to hit 150 to 180 sometime in November. I guess it's not out of the question here. You know, I mean, Josh Mann thinks it might go to 444. I don't know about that, but I do think that we're going to see an expansion in the price of Bitcoin here, because we're seeing an expansion in liquidity. And what's happening is you've got the central banks are easing. You've got the Fed who's now easing, and you've got some factors here that are going to cause it to continue to ease. You've got China, who is expanding on their liquidity and their money supply, and that is going to start feeding into risk assets around the world. Japan has been, if you're watching Japan, they have a new prime minister who was just elected that is akin to Trump. And the thought there is that liquidity is not going to stop in Japan. And even though they are in a precarious position of being the largest buyer of their own bonds, the largest owner of their own bonds, having done yield curve control for many years here, and now sitting at a spot where their yields have spiked up significantly. And so what's going to happen there? Well, the idea is that, the thought is that, look, this has been the carry trade for the world, where you can borrow yen cheap, and turn around and buy risk assets around the world. It's just access to capital on the cheap. And the thinking is that that's going to continue now with her in place. So that's a big deal. Another big deal is that, as we've seen just this dearth of volatility in both stocks and bonds recently, that means there's access to more capital because it requires less collateral to borrow against. So that's an expansion of liquidity. I talk about Michael Howell a lot, cross-border capital. He's got a great liquidity measure that he likes to look at that I think is probably the best that I have access to in the world. I really respect the work he's done. I don't know exactly what his calculations are, but I know what's in the pot. And so things like bond liquidity, bond volatility, shadow banking, meaning hedge fund and private capital, the central bank, the QE, QT, like all that stuff is in there. And that's really the measure beyond M2. M2 is one like big factor in it, but then overarching all of that is just we're a world built on debt, on leverage, on borrowing, and that's what's going to keep driving this. And I believe that that's going to keep expanding through this year and into next year. And that cycle of liquidity is just continuing up here, and it's going to probably top out sometime next year. So the answer is, I have a high degree of confidence that we're going to continue to expand. Do we have a blow off top? Well, it would seem that that's where the market wants to go here. Just if you look at the emotion of stocks, if you look at the psychology of them, we just keep reaching new highs. It feels like we're going to get to the point here of just absolute ridiculous FOMO across the board. I don't know when that is or how that plays out for Bitcoin, but it just feels like that. And it feels like I feel the echo of 1998, 1999 here, where you had all those internet stocks, and it was just madness. You're too young to remember this, but it was you would buy an Amazon or a Google, it would be up 20, 30, 40% in a day. You're just like, wow, do I sell it? What do I do? And then it's up another 40% the next day. You're like, oh my God, like what is like this is just insane. Especially the smaller ones, not the bigger ones like those. But the problem with the market is that the breadth is very, very consolidated with the AI. The Mag 7s. That takes up the vast majority of the index now, and that's a little bit worrisome. But if you look at the indicators of what's going on and where the Fed is right now, which is they're a big driver of liquidity. I just expect liquidity to expand going into this quarter, and so I'm continuing to be long. I have hedges on in case we have some sort of black swan event. Best we can do, But by and large, we are still invested. The old thinking or the traditional thinking on Bitcoin, traditional, it's only been around 15, 16 years, but was that as you get through these market cycles, these 4-year cycles, they were attached to the supply. So the mining and the reward and the halving every 4 years. Well, that is absolutely, I believe that is absolutely the huge driver beginning in the first few cycles. But now as we get along here and that reward becomes less and less important for just the number of Bitcoin that are out there, and just as a percentage of the new supply, it just becomes, it's not as important. What is important is the hash rate and the cost to actually mine these things. Number one, access to energy too, which they're finding all kinds of ways to mine for just pennies, per kilowatt. So that's one thing. But really, the big driver of this latest cycle, I think, is getting much, much more closely tied to what we just talked about, the liquidity and global liquidity and expansion and contraction of that liquidity and money supply. And so, and you're seeing that kind of in real time on a lag. What do I mean by that? Well, when you look at somebody like Michael Howell's work, he'll plot the liquidity and then he'll plot Bitcoin on a 10 or 12 week lag behind it, because it takes that long for that liquidity to see itself, to see the liquidity driver in the price of Bitcoin or in the price of gold. So it's a little bit different than securities. So that's one thing. The other thing is, if you look back at the 4-year cycle, what's interesting is that it matches up perfectly with our presidential cycle. And this last presidential cycle was extremely important. And what I mean by that is that we had a quite an antagonistic cabinet previously, and administration as a whole, through Biden and his administration, and particularly the psychopath out of Massachusetts, Elizabeth Warren, and her anti-crypto army.
Central banks are truly leaning into an easier money playbook. Rate cuts are expected, China is pumping up liquidity, and Japan, under a new prime minister echoing Trump-style policies, is sticking with ultra-loose money despite its massive bond market risks. All of this fuels the carry trade, supports global risk assets, and suggests the liquidity tide will keep rising through next year. Meanwhile, Bitcoin isn't just riding the old supply-only wave of mining episodes and halving events anymore. It's increasingly driven by mining economics, hash rate, energy access, costs, and macro liquidity flows. Research shows Bitcoin tends to lag global liquidity by about 10 to 12 weeks before making its move. Add to that the way Bitcoin cycles often mirror US presidential politics, shifting regulations, changing sentiment, and election year uncertainty, and you get a complex chain reaction. Easy money fuels carry trades, which boost risk assets, drive up mining costs, and eventually ripple into crypto prices with a delayed response. But here's the question. As central bank liquidity pours in and Bitcoin seems poised for liftoff after its lag, what happens if that liquidity tide recedes before Bitcoin's delayed jump arrives? Are we looking at a dramatic throttle back or a trapped rally that never quite takes off? Now, let's turn our attention to Benjamin Cowen.
Yeah, I mean, we kind of got close to 130 already. I think what did we hit, like 126 or something? I think there's like a scary chart and there's an optimistic chart. The scary chart is this one. This is the ROI from the low for Bitcoin compared to the last 2 cycles. Like, this is normally when it tops out in terms of ROI as measured from the low. But one of the reasons it looks like this is because in the 2013 cycle, the 2014 bear market actually lasted 1 month or a couple of weeks into 2015. So the low, instead of being in like a late 2014, is being measured from early 2015. So the pessimistic way to look at it, and if this way is correct, and I don't think anyone hopes that this way is correct, if this way is correct, then there is no alt season, right? Because it means the high is already in, and usually when the high is in, alt season then starts immediately, or at least within a few days. But a more optimistic way to look at it is to take the ROI from peak to peak and say, if you compared that to the 2017 cycle, it would still suggest that we could still have one more move up, kind of towards the end of the fourth quarter of the year. Now, and you can see structurally, like, these 2 cycles look really similar to each other, right? I mean, the downturn, you can see the low in 2015 happened after the low in 2022 in terms of like where in the cycle. And that's why when you measure it from the low, it looks different. But generally they increase together. And recently we've fallen off because we would expect diminishing returns, right? So here's the thing. In order for Bitcoin to get this move higher, we need to see a liquidity rotation back into Bitcoin, right? We need to have a defensive rotation. We need for people to recognize that Bitcoin is the reason we're here and not all the other cryptocurrencies. And if they can do that, and if Bitcoin can go to a new all-time high, then it could theoretically lead to Ethereum going to all-time highs. My base case is that Ethereum will go to all-time highs. But here's the thing. There's a difference between Ethereum going to an all-time high and it going to an all-time high that it can actually hold for more than a few minutes, right? If Ethereum were to just go up to 5K and sweep the high again and then drop again like it did last time, that's not going to lead you to an alt season, right? In order to get an alt season, you have to have Ethereum hold 5K. But again, you can't have that unless Bitcoin is going up a lot more and liquidity is flowing back to the king. So that's how I see this whole thing playing out. Like right now, we're at a very precarious position for Bitcoin. And what I'm looking for, so there's no ambiguity, is the cycle. There's still a reason to be optimistic as long as Bitcoin is holding above the 50-week moving average. Every prior bull market for Bitcoin, when you had 2 weekly closes below the 50-week moving average, the cycle was over, right? That was it for the cycle. So that's what I'm looking for. If you get a weekly close, 2 weekly closes, right now it's about 102K, so about $10,000 lower than where we currently are. Weekly closes below that, I think you just have to cut your losses and say, all right, well, the cycle's over. Too bad. That's all we got. As long as we stay above the 50-week moving average, then there still is reason to be optimistic. The good thing for us this cycle is that a lot of times, the 50-week moving average is pretty far down from the all-time high, but right now it's only $10,000 below where we currently are, right? Like, so if in a worst case scenario, where the cycle's already over, there should be confirmation of it at not too much of a lower price, theoretically allowing people to kind of get out and salvage as much as their portfolio as they can. Because I do think the top will be in the fourth quarter. Okay. And I think that next year will be a bear market. And that is something I've continued to be somewhat deterministic about. Top is this quarter. Next year's a bear market. If you want to hold anything in the bear market in crypto, besides stables, right, it should be Bitcoin. I would certainly get out of altcoins for 2026. If it plays out like the 2017 cycle, then you might see altcoins run into really early 2026, like the first week or two. But I would not, I certainly would not be holding altcoins, March of 2026, because usually by that point in the cycle, they're doing nothing but getting wrecked. So what I'm looking for Ethereum to show strength, to rally to a new all-time high, and for a rotation out of altcoins back into Bitcoin, right? So you can have Bitcoin and Ethereum kind of going up simultaneously, kind of like the blue chips, right? And then the other aspects of the market will likely continue to lag until Ethereum can hold 5K. We get these 30% drops or so, like to the bull market support band in September, October of post-halving years. And then what typically follows after that is the final rally into the market cycle top. So that's what I'm expecting. I'm just kind of expecting a final rally into the market cycle top for Ethereum, where it holds support at the bull market support band. I think, I could be wrong, but I think that the low for Ethereum here is already in. Like, that doesn't mean it can't have some residual drops where it finds support here at the 21-week EMA. Like, if you go back to the 2017 cycle, you can see that's kind of what happened in the month of October, right? Ethereum had this drop back down, and then it just kind of stayed there throughout the rest of October, and it didn't really start moving until mid-November. So, and again, while Ethereum was going sideways, Bitcoin was actually going to all-time highs during that time. And then that was how Bitcoin dominance was able to go up, is because Bitcoin was skyrocketing and everything else was just going sideways and not really moving a whole lot. So I think that, if this defensive rotation persists and we can get it on a Bitcoin rally, there's a really good chance that the altcoin market will not immediately follow. Because think about how many people just got wrecked in altcoins, right? There's going to be a lot of people that are going to be a little nervous to throw a lot of money at alts when they're worried they're just going to get wiped out again. So when that happens, you get these defensive rotations. And that's why I'm saying now, I think Ethereum is going to go to all-time highs. I do. I will, I'll be the first to let people know if I think I'm wrong on that. But I think it will. I think that, right now it's going through this process of trying to confirm this level as support, kind of like it did in 2021, right? Like right here, you can see there's a couple wicks down in September of that year, maybe even into early October. And then again, same thing in 2017, where you had it holding support even into early November. So base case for me is that Ethereum will go to all-time highs, but at the same time, there's a really high chance that it's going to lag Bitcoin for a few more weeks.
Benjamin Cowen recently shared his thoughts on where Bitcoin stands in its current market cycle. He noted that Bitcoin's return on investment in this cycle is close to previous peaks, but could still have room to grow. He explained 2 ways to view the cycle. A cautious one, based on ROI measured from the market low, suggests we may be near the top since past cycles ended similarly. This view implies no coming altcoin season, which usually follows Bitcoin peaking. However, looking peak to peak, like in 2017, leaves room for another rally, possibly in Q4 2025. Cowen emphasized that Bitcoin's future rally depends heavily on liquidity flowing back into it. A key level he watches is Bitcoin's 50-week moving average, around $102,000 now. If Bitcoin closes below that level twice weekly, it might mean the bull cycle is over, but as long as it stays above, the cycle is alive. He highlighted that the 50-week average is near current prices, making it easier to spot any trend changes soon. For Ethereum, he expects an all-time high, but said it may lag Bitcoin. He mentioned past cycles where Ethereum held support before moving up, often moving more slowly than Bitcoin. Benjamin Cowen warned that altcoins might struggle in early 2026 as investors remain cautious after recent losses. He sees a scenario where Bitcoin and Ethereum rise together, while other altcoins lag until confidence returns. As we wrap up, do you think Bitcoin breaking above the 50-day moving average will kickstart a stronger bull run, or are we still due for a pullback first? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.